Hey traders, John Howell here. Today in today's video, I want to teach you something that is going to help you with your trading to identify when what's likely to happen with your particular stock based off the moving averages on that chart. Let me share with you what I'm talking about here. Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alright traders, so let's get straight into it. One thing I really want to share with you in today's video is I really want to share with you just one simple technique you can use to identify some really good trading opportunities. The thing that I really want you to do is this. Firstly, if you're trading a daily chart, so right now we're looking at the stock Apple. And if you're trading, say, the daily charts, okay, you're looking at the daily charts through here. What we need to do is we need to then go to the weekly chart to see what's going on with that weekly chart. Now, the first thing you want to do is you want to make sure that if you're looking to take a position on that daily chart, that daily chart is also in that entry signal. If you're looking to go long, then you want to make sure that the higher time frame, the weekly chart, is in an upward trend. So as you can see here, we have a low, a higher low, comes up, comes back down, a higher low, and it rallies up. So whenever you're looking to take a position, if you look to go, oh, I'm going to short Apple here, I'm going to short Apple here, or I'm going to short Apple here. If you're looking for a high probability in the markets, like a high probability situation in the markets, then what we need to be doing is what you want to do is you want to make sure that that when you're taking a setup, when you're taking a trade, that it's in line with this higher time frame trend, this weekly chart, so to speak. Okay? Because the thing is if you're looking to short a stock and you get these pullbacks, you never know when these pullbacks are going to end, right? And that's how the market trends up like this. And all we're looking to do is we're looking to jump in here, here, and there, right? We're going to wait for that turn and jump in. And that's what we're doing here. Wait for the turn, jump in. Wait for the turn, jump in, so to speak. And then let the market rise overall. So that's what you want to be doing when it comes to looking at the markets. Just make sure you are trading with that high time frame trend. Now, the next thing you want to be looking at is where is the stock in regarding to the moving average. So I'm looking at the weekly chart to the left over here. And you got to ask yourself, where is the stock in relation to the moving average? Because the moving average is like a magnet to the markets. And if it gets too far away, it comes back to that moving average. And so how can you, if you just see this, notice how when the market gets too far away, we end up having a pullback, right? Or we get too far away to the upside and we end up having a pullback. So, and if I just squeeze my charts up a bit more here, you can see here that we eventually come, even with the big whole vid crash through here, we eventually come back to the moving average. So how can you use that in your trading? If you're looking to, just say for example, okay, yep, we have an upward trend on the weekly chart, so therefore I only can take long trades on the daily charts. But you're looking to take a long trade, but you notice that the market is, yes, the market is going up, but we're getting quite the distance away from the moving average. And we're now likely to pull back towards the moving average to reset, to go for what? To go for another move. Like right now, you can see the distance from the actual, so the distance from the moving average was from there to there, as you can see. That was the distance from there to there. Now you can see, if I look at Apple is actually much further away than it was even back here over the last 12 months. So you can see the reason why Apple's pausing a little bit, because we had a big move up. Now we're pausing a little bit, maybe go sideways, wait for the moving average to catch up, or maybe we're getting ready to actually have a pullback down towards this maybe 160 level on Apple, and then that 160 level would be around about that moving average, and then sort of the price and time start the market is starting to reset, so to speak, and then it's probably going to make another high low, and then away we go again. So the first lesson here, traders, is that always trade with that higher time frame trend. And the second lesson in today's video is that make sure that when you are trading the markets, just make sure the stock is not too far away from the moving average, because once again, if you're looking to take a long up here after the market's gone up quite a bit and we're quite a distance away from the moving average, yes, you're trading with the trend, but then the trend the trend is probably likely to take a bit of a pause and have a bit of a pullback. You may go long here, then come down and get stopped out. The best time to actually get involved with it is when the market comes down to the moving average and then we start to pick back up. Come back down to the moving average and then we start to pick back